What's up, everyone? It's Kadi with Money Investing. Thank you for joining in. We've got the jobs data coming in about 7 minutes. It's 8:23 a.m. Eastern right now. I do want to mention in advance that right now we are going through some power outages here in India. So if the power does go out, the live stream will cut off. So I just want to mention that precursor there. But nonetheless, we've got the jobs report coming out. I've got 3 things running at the same time. So we've got Jerome Powell speaking, which is going to be more so about climate change and how finance actually plays a view. But yep, we're going to be waiting for the May jobs number in about 7 minutes here. But the futures are pretty much flat. We got the NASDAQ is up just a little bit over 6 basis points. And we got SPY that's up over 8 basis points. So pretty much flat on the day, but the NASDAQ did go down a little bit over 1% yesterday, and the SPY was also down about 37 basis points. Let me know in the comment section if you guys can hear me without any issues, if you're able to see the screen. Wesley, I am vaccinated, so I got my first dose not too long ago. I think it was about a month ago that I got that. So all right, so we are good to go. Looks like Ford is up. Yes, I've been seeing that. Let's take a look at where it's trading. It has been up, so it's a little bit up over 2.94, almost 3%. Incredible move from Ford, right? So this right here was the bull flag that it was forming, and then we saw a huge breakout to the upside for Ford stock, right? Massive move over here. Yep, so we are ready to crush the day. Let's take a look at AMC over here. So we are slightly down over 7% pre-market, and this right here is going to be QQQs, the VIX, which is coming down about 55 basis points. And we've got the S&P 500 over here. So let's listen in on Bloomberg here.
That we invest in the way we think about real yields, those financial conditions, rising inflationary trends, and yet that magnetism of a 10-year yield at a 162. And then, of course, Romain, as we migrate on over into the world of equities, the insistent repeated calls of this sort of reflationary cyclical trade.
This still remains a market that people are deeply invested in.
Inside, away from the news on AMC, at the idea that you say there's still this bid to the market, that is the undeniable fact.
Absolutely, and we've seen that continue in a lot of the strategists we've talked to.
Coventry emails in and says you got to quote the real yield. We'll do that for John from Coventry. Negative 0.81%. We've got a much.
Corsair is down quite a bit pre-market right now. It's down a little bit over 5%. Wonder what happened there. Trading exactly at $32. Thanks for sharing all the technical information with us every day. Super helpful. Amit, thank you so much for joining in. I really appreciate you. So yeah, we got about 4 minutes left for the jobs data to come out. And we also got the YouTube live stream going here. The People's Bank of China and all other leaders.
Direction. The second risk that I see is clearly that we yet again go into this sort of double standards or different types of disclosures as we have seen it back right after the great financial crisis, where key principles were devised by the IFRS.
Look at NVIDIA. Look at NVIDIA. It's up over another 47 basis points, almost at $682 per share. Absolutely incredible moves from NVIDIA. Yeah, so we can do technicals on Etsy and Airbnb as well. We'll do that probably after the jobs data comes out. It's going to be about 3 more minutes. We're just going to be waiting. Again, the expectation usually has been that if the jobs number come in much higher than expected. So right now, I think the estimate is currently 650,000. We broke that down yesterday. So let me actually go over that while we have about 3 minutes for that. So this is something that we broke down in our yesterday's market update. So this right here, so US jobless rate expected to drop, so 5.9% is going to be the new rate, that's the estimate, versus the 6.1% that was prior. And 8:30 a.m. is what we're waiting for. 645,000 is the estimate. Remember, last month there was a big miss, right? We were expecting close to about 1 million. We came in at 266,000, so a huge miss there. So if we come in much higher than 645, closer to 1 million, if you're playing any catch up there, then there's going to be some expectations of a potential inflation.
CNBC, and we are just a minute or so away from the government's May employment report. Ahead of that number, let's welcome our jobs panel for some predictions of University of Chicago's Booth School. Kate Moore is the head of thematic strategy for BlackRock's global allocation team, and Diana Perchkot-Roth is former adjunct professor of economics at George Washington University. Of course, we have our very own Steve Leisman and Rick Santelli with us as well. And guys, I'm going to ask you just in 10 seconds, give me your number that you're looking for. Austin, you first.
Well, one of these months we're going to get a big number because the virus is coming down and the virus is gone. So I'll say 800,000.
Okay, let's move on. Kate, how about you?
I went with 730, so slightly above consensus.
Diana, did you make a guess at this?
Well, no one knows what it's going to be, but it's going to be a strong number. I think it's going to be a strong number.
Okay, Rick, how about you? You got a number you're looking for?
Yeah, 550,000 and 5.8 on the unemployment rate.
And Steve, how about you?
Randomly guessing 852.
Randomly guessing because
The
ADP and
Nasdaq
others
is
have
pushing
been so
higher,
wrong
over
lately?
30 basis points, 40 basis points here.
It's been I'm guessing it's going to be on the high side going.
17. Unemployment 5.9%. But Steve, go ahead. Rick, take it away
Okay,
for us.
We're out. 559,000 is the May non-farm payrolls. And if we look at what's going on with respect to the change in private payrolls, 492,000. Manufacturing, 23,000. The unemployment rate, 5.8. And if we look at average hourly earnings month to month, a robust 0.5%, up 0.5. If we look at year 9, and finally the labor force participation rate, 61.6. That's a bit of a disappointment because 61.7 twice post-COVID is the post-COVID high. And I do want to mention, prior to COVID, this number was 63.3 in February of 2020. And finally, the underemployment rate was 10.2, a 0.2 drop from our last look. The market's quickly taken a scan, haven't moved too much on the Treasury side. It looks as though they firmed up on the pre-opening futures and the equity side. And it certainly looks like I nailed both of those, doesn't it, Becky?
It does. You were off by just 9,000. You came in at the lower end than a lot of people were anticipating.
All right, so we got 559,000 jobs added in the month of May. Labor force participation was 61.6%. Unemployment drops down to 5.8%. So it's kind of like in the mid-range. Still came in a little bit lower than expectation. 650,000 was the estimate. But that being said, the Nasdaq is slightly higher than the S&P 500, up over 38 basis points. And we got the SPY also up over 30 basis points. In fact, the Nasdaq is up over 40 basis points right now, and the VIX is coming down a little bit, less than 17.6, down about 2.7%. Nvidia pushed up a little bit to 69 basis points. Let's take a look at AMD. We're up over almost 65 basis points. Let's take a look at Tesla. Tesla had a really strong sell-off yesterday. We are up over 1.5% right now. Let's take a look at NIO. Up just about 1%. By the way, what do you guys think? Has NIO found a bottom yet? Is NIO going to be bottomed out at these levels at close to $30? And right now we are pushing higher. Potential for no retest down to that level. So this was the best outcome midway. Too high, tech would have tanked. Yeah, I mean, if it was too high, if it came in a little bit more than 1 million jobs added, then there would have been more concerns about potential inflation. Then that could have led to more speculation on interest rate hikes from the Fed, and that could have led to growth and high multiple and tech stocks, getting hit harder than some of the other value companies. But nonetheless, we came in at a decent level at 559,000. So I think correction will take NIO lower. So interesting. So $4 seems to be a solid for NIO. Yes, $4 is kind of holding up. So it held up yesterday at 40.31. We had a green candle on a red day, so that was pretty interesting. And right now we are up another 1.1%. Let's take a look at Apple and some big tech stocks. We are up 53 basis points for Apple. Let's take a look at Amazon. Up 60 basis points, just trading back over 3,200. Still, the moving averages at 3,250 is the resistance we got to break out for Amazon moving forward. NEO gets back to 34, I'll take my position back. So lowest it could go is 38.39. There's some outside bad news about NEO, but seems pretty solid at 40 so far. Yeah, 40 is a support. So here it says weak jobs number. I'd say it was kind of like in the mid-range. It wasn't weak or strong, I would want to say, because the NASDAQ is definitely pushing higher because there's less forecast or speculation for the potential for inflation. And the SPY, you'll notice, is up, jumped over 45 basis points, wiping out all their losses from yesterday. The NASDAQ still has pretty much more work to do. And the VIX is dropping sharply now. It's down a little bit over 4.7%. So definitely we saw a month-over-month pickup, and that's going to be a little bit over 100% coming in from April to May, when we did just about 200-something thousand jobs versus the 559 here. So U.S. 10-year yields unchanged. Yes, we're not moving on the 10-year yields yet. We're sitting at just negative 32 basis points, sitting at 1.62. And then yeah, next week we've got the CPI and the PPI data and the retail sales. So inflation figures are also going to be very, very important. So Jay Powell is also speaking right now. It's more so about Martin says CNBC stop shouting. Yeah, they're really loud about that. But yeah, Jay Powell is speaking more so about climate change and how the financial banks are going to come together. Central banks across the world are going to come together to make about that change. So nothing related to the monetary policy. I've been listening to it since 7 a.m. Eastern, and he's still speaking on YouTube. You guys can check that out as well. We do have it on the live stream, but there's nothing really that important that's happening right now from a monetary policy standpoint. All right, so let's go over to some stocks here very quickly to get a good understanding on where they're trading pre-market. So let's look at AMC here. Did AMC react on this news? Not yet, so down just about 7%. There was another piece of catalyst that came out for AMC this morning. I think it was just an approval. So seeks to expand authorized share capital by 25 million shares. Issuance not permitted in 2021. So not this year, but potentially going into next year. I think they're done for this year for any type of share offerings. I think it's only left with like 46,000. It's like a really small number that they're left with. And I think they're done with any more sort of potential share offerings. And quite honestly, what they're doing is to basically benefit the business in general, right? At the end of the day, it's an actual business that everybody wants to see succeed, except for the short sellers. But it's benefiting the business in general. They can use that money that they've raised over $1 billion to actually go out and buy more, potential do mergers and acquisitions or whatever they need to do to actually enhance the quality of the business in general, build value, and get on the right footing, and basically kind of negate all talks about bankruptcy in the future. So I have a bad feeling about these hype train and meme stocks. Can you give us your opinion? I think a lot of people will get caught back holding. Feels like a real pyramid scheme. So I think it's largely driven by the momentum that it has behind it. Of course, I mean everybody who is AMC, who knows AMC or who's been trading or investing in this knows, like everybody knows it's out of the bag, that it's not a fundamental play. It's never been, right? If you are trading this or investing in this company based on the fundamentals, that's not the case, right? Nobody's doing that. Everybody knows it's a momentum play. Everybody knows it has a high short interest. So if you are okay with the risk that you're willing to take with AMC, if you are okay with the money that you're investing in, you're okay with that affordability of potentially losing some or all of that investment, then yes, you can have some fun and you can trade or invest in AMC. But of course, with the long-term prospects and the actual fundamental value is in my opinion a little bit lower than where it's trading right now. But that doesn't mean that that you can't participate. You certainly can if you believe in the cause and you are looking at the momentum side of things by understanding what the risk is, which is incredibly high because the volatility is really high for this stock. So so Greg says trade will get more people into the AMC squeeze because of his interview on CNBC a few minutes ago. Yeah, I watched that a little bit ago. And yesterday also, great interview with Adam Aaron as well, AMC CEO. So if you guys haven't checked it out, definitely encourage you guys to check that out because there was a lot of information that was basically cleared up in that interview. So super, super helpful. And of course, very, very well presented as well. All right, so let's take a look at Enphase, ticker symbol ENPH. up just a little bit of 1.25%. So we're still trading under $150. So Rick Harder says going to buy Tesla at 400. 400 is I don't know. It's a tough target for Tesla. I mean, you know, and yesterday's news definitely was a little bit of a surprise with the May potential, the allegedly sales numbers of 9,800 reported by the information, which was, I don't know, we have to take it with a little bit of skepticism. We're not dismissing that report completely, but to get to the bottom of this, we have to really understand if it's actually accurate or if it's just, you know, the net new orders for Tesla, which was reported as well. So Tesla going down, I don't short it though, it lost so much money. Yeah, I mean, that's the thing, you know, even if I think in the short term that Tesla may have some more downside, I'm personally not going to bet against it because we know what happens when you know, you go against Tesla and if you try to short it. So APPS technical analysis, it's funny because we actually did post a trade on our Patreon for APPS. Right now we are up a little bit over 33 basis points on it pre-market, but I put my support and resistance levels for this stock and the price target as well on this. So if you guys want to check that out, you know, we put a specific trade plan, but in a nutshell, there is support at close to $53. So that right there is going to be support here. And we are literally just testing some type of a resistance. There is a resistance for APPS that's close to $68 per share. So right there is going to be a resistance inside those moving averages. And you know, for us to see a breakout and a continuation follow through for a digital turbine, it needs to break out over that $68 level. Right now, we're just tagging those moving averages, the 50 EMA, which is sitting at roughly $68.68. But we did post like a specific swing trade opportunity on this with the entry, the exit price, the upside, the downside, the profit target, and the risk scorecard as well. So again, that was completely posted on the Patreon as well if you guys want to check that out. So can you consider start discussing Ford and EV analysis that jumped 35% a month? Yeah, definitely. I mean, we can include Ford as well in some of the future analysis. But there we go. We're back down for the NASDAQ and the SPY. So we did have an initial pump, but I feel like a lot of people are going through that jobs report to get a good understanding on the specifics, and we are back down because coming in lower than expected. So yeah, we're only up about 12 basis points, trading as low as 330, and SPY is just up over 26 basis points. So we're back down. QQQ is moving up in pre-market. So we were back down here. You know, we traded as 331 for the Nasdaq, and we're back down to 330 levels right now. So where is the resistance for AMC? That's a great question. Let's take a look. So this right now, I feel like we are forming some type of lower highs. This is the 1 hour chart. If I were to bring up the 21 and the 50 EMA, you'll notice that we are still, you know, validating some of those levels. If I go over to the 4 hour chart, you'll notice that we are perfectly kind of validating that 21 EMA, and we have been. If you go over to the 1 hour chart, we talked about it during our yesterday's live stream and how AMC has consistently validated that 21 EMA, but we did get a breakdown below that level yesterday, and the 50 EMA acted as a back tested support. We pushed up, we formed a lower high. So I feel like right now that 21 EMA at $51, $51.40 levels is going to be the level to watch, because yesterday we kind of closed below that level. We got tagged at that resistance, and a breakout over that level could potentially also break us out over this descending triangle as well. So Tesla will get a pullback to 388.25. I personally honestly believe that both NIO and Tesla have found a bottom. Like for Tesla, I strongly believe that 540 is a support. It's a very strong level of demand. And you know, from a couple live streams ago and from videos ago, I mentioned that I would not be surprised if in the short term Tesla sees some more weakness, right? If we trade below $600. Now, right now we're trading at lows of 570, is it 560 or 580 levels? So $580. We're trading exactly at that level. So, you know, 540 is going to be the support right here. But then moving forward, I do believe that we're going to see some more upside for the stock. And in the second half of 2021, this is also peak season for automotive industry. We're going to see more sales. We're going to see more deliveries, more productions. The chip shortages, the supply chain issues are potentially going to get better in the second half of 2021. Neil also has mentioned that. William Lee also mentioned that, you know, in the second half of 2021, we're going to see more growth when it comes to supply chain issues. So moving forward for both of those companies, I strongly believe that we found a bottom. I could be wrong, but again, this is like a, you know, like a very simple prediction. We'll see if I'm right or wrong, but you know, I strongly believe that NIO more specifically has found a bottom at close to $30 per share. And second half of the year, I strongly believe that tech and growth is gonna do really well. So Ian says, I love the Apbs, but AMC is very overvalued. Yeah, I mean, it's not, in my opinion, again, it's not a question of whether AMC is undervalued or overvalued, because those are terms that you use with fundamental analysis. So if you were to do any type of basic, you know, estimates based on different models like discounted cash flows, or you're looking at, you know, different pricing models or price of sales or earnings or comparable analysis with other theater chains, it's not going to make sense. Like $51 doesn't make sense from a fundamental standpoint, but that is not the game here. Like a lot of people that are trading or investing in this are basically doing it to A, send a message, of course, and B is to basically trade it on momentum, right? Momentum and the data points that suggest that there is short interest, which is not squeezing. So unless that happens, everyone is going to hold on, right? That's the whole game plan. Love your channel and the focus with the technical analysis and fundamentals. I hope that AMC focus is temporary. Yeah, you know, again, it's just because I know that a lot of people are interested in it. They want technical analysis on it, and they want to really understand what those support resistance looks like. So that's exactly why I'm basically going over these levels. But yeah, the focus has always been fundamental technical analysis and the mix of macro analysis as well to understand the economy and the growth of you know, the U.S. Markets. So fundamental analysis doesn't work since Greenspan lowered rates after 9/11. Wow. Yeah, I mean, it's every year we kind of push up the benchmarks, right? Every year it's like price to earnings ratio or a little bit too high, because then we set the new benchmark for them. All right, so let's break down. Zach, thank you so much. I really appreciate that, your comment. So, all right, we're kind of really choppy here with the QQQs, right? We're just going back and forth on the 5-minute chart, and Nasdaq just did a nice old pump and dump right now. Yeah, I can see that. We're just going back and forth, but still in the green, and the SPY is also up there with the VIX coming down a little bit over 4%. The yield's pretty much flat, although we just turned green for the VIX as well. All right, so let's go over some stocks here. Let's go to the daily chart. Let's go over to Etsy first. Let's see where it's trading. So Etsy, huge drop after the earnings. I strongly believe that this could be a buying opportunity here with the unique product offering. I think we covered this stock as well, and I do believe that they're going to potentially fill in this channel, right? Fill in that gap that that Etsy left after the gap down that we had on the earnings, which also are really strong for the company. I think we did see some type of a decelerating growth for the company. So let's take a look. So this came out on June 2nd. Etsy to acquire UK's Depop for $1.63 billion to expand high-frequency apparel. So to watch, the support is going to be 155, and resistance is actually going to be all the way as high as 191. But there is going to be some resistance at those moving averages at 184. You know, so those right there are going to be the levels to watch at 191, and even as high as this level at close to 184. But I do believe that there's more upside to Etsy right now, because we're analyzing Etsy. So I do believe that there's more upside to Etsy at close to 184 or 191. That's the retest level. All right, so let's take a look at some other stocks here. So the VIX is not spiking. Why? Because, I mean, it only spikes when, you know, it has a negative correlation with the S&P and the Nasdaq. And right now we are seeing the markets push up higher, the volatility come down. We're still down a little bit over 4.1%, but we did spike. I mean, it's not like we didn't, right? Coming in from May 7th, we did go up to 29 levels. This was back on during the middle of May. And even over here, we did see some type of a push higher from 15 levels to over 20, almost 20. So we jumped to 23%. And next week is going to be much. So in terms of a priority ladder, remember, unemployment is kind of like low priority. Inflation is kind of like moderate priority. Interest rates is the first priority, right? So we're coming in from like a low priority data point to a high priority like in the middle of June. So right now we have the unemployment, next week we have inflation, then we have interest rates. So we're going to see some minor spikes here as we kind of tether down, like we move down, and inflation comes out, we push higher potentially, right? Again, this is speculation, then we push up to 23, 24, 25 levels, then we kind of die down here, and then we spike even higher based on interest rates. So that's kind of like the whole analysis on the VIX, and right now, of course, when it's coming down, the S&P is pushing higher. Tesla has likely dumped Bitcoin. Yeah, I saw that tweet from Elon Musk. Again, that was a meme. Not sure what to make of it, because again, it's just so cryptic. With the image that he posted, the couple breaking up, and the Bitcoin hashtag with the heartbroken emoji. I don't know if it's in the news section here yet. So here, Musk breakup tweets bruise Bitcoin. Bitcoin is down a little bit over. Is it 7.4%? No way. No way Bitcoin's down 7.4%. Last time I checked, it was down over 4%. It's down about 6% right now. Okay. So, down trading under $37,000, but that right there was the tweet. Yeah, you guys can more than welcome to go check it out if you haven't already. But yeah, it was pretty interesting. Not sure what to make of it. If it actually is true, we're gonna find out more about it in the earnings report, of course, which are coming out like in August. Even if it did, I think they will still net a profit on the sale of Bitcoin, I believe, because I think the purchase price was close to 30,000 or close to 32,000. All right, so let's look at some other stocks here. So let's look at SNDL. So yesterday we did check this one out too, and we are seeing that breakout. I think it was on a different chart. So SNDL up another 2% right now, definitely breaking out, continuing on that pattern. I will mention though that even though it was up 14%, we had a red candle, meaning that intraday we saw weakness and we saw some sell-offs for the day, right? So those are things to consider here, because we also left a gap, so would not be surprised if you do kind of come in, fill in that gap at $1.12, $1.10 before making the next leg up higher. So NASDAQ gave back all the gains. We're still up about 41 basis points right now. So yeah, we're pushing higher. We did like a quick push up, back down, and right now we're pushing higher once again. All right, so what other stocks do you guys want me to look into from a technical standpoint? I don't have a position in SNDL, cool. I don't. It's mostly, well, for the most part, it's mostly growth companies that you guys look at the channel, mostly tech-oriented and growth-oriented stocks. Those are the 12 that we cover on a daily basis. And of course, we got NEO, Tesla, we got Palantir. Zach, I did not play AMC now. It's a little bit outside of my risk tolerance. I did joke about it though. I did post it on my Instagram story, basically saying free popcorn. Is that what they're offering? I'm going all in on AMC. I mean, that's too much. Free popcorn is great, but no, it's a little bit outside of my risk tolerance. All right, so I want to buy more Palantir stock. Should I wait for the CPI or it won't affect the stock? I think it would affect the entire market. Inflation data usually does. But let's take a look at Palantir here, because we did get a breakout, a couple days ago. We're still holding above pretty well. I'll say that, right? We did come down below 24.30. That is the new resistance to watch for Palantir. This is a stock that I strongly believe is easily going to be at $100 billion market cap. Right now it's sitting at 44. So that's, a little bit over 100% upside. So my price target well over $50 per share as well. But we have to be very patient with this stock. We have to allow the valuation, the fundamentals to kind of catch up to the stock price, and then see some more upgrades from Wall Street. But yeah, $22 is going to be the next support level, all the way as low as $21. And then based on inflation data that comes out, and in my opinion, there is going to be a sharp increase. We have to be prepared for it, and hopefully the market is prepared for it as well, so we don't get like an overreaction for it. But even if we do, that only represents good buying opportunities for stocks that would be coming down aggressively. And at the end of the day, it's only about when inflation goes up, how quickly is the Fed going to taper back, or interest rates are potentially going to start going up, right? That's going to be quantitative tightening that the Fed is going to start doing to freeze up some liquidity. That way people don't borrow money at cheap prices and they don't spend, so to control inflation in general. And we also broke down the Beige book that actually came out earlier this week, and different districts had different prices that varied across the board, from manufacturers to final goods and services. So I mentioned in that video that just because the prices of the materials, the raw materials, actually going up, doesn't always necessarily mean that we're going to see that cost getting translated over to consumers. Because some districts, you'll notice, when they do these surveys, they're reaching out to businesses. Some businesses are not even translating those costs over to customers because there's competition. So businesses are basically absorbing this temporary run-up in materials, which is resulting in the increased prices in freight, transportation, logistics, commodity prices, and they're absorbing all that, right? That's eating into their own margins, but they're not raising prices because of competition. So it doesn't necessarily mean that we as consumers are going to see inflation on our end, but there could be inflation on the back end of manufacturers when the commodity prices, materials, raw materials, input prices go up. But that's district to district, right? That's what we're seeing from different districts like Minneapolis, St. Louis, New York. Those were some districts that actually did see some prices increase rapidly. Yes, the jobs report is out. We came in at a 559,000 print that we added in the month of May, which is a little bit lower than the estimate. 650,000 was the estimate, but still 100% increase month over month. Average hourly earnings also went up. I think it was like 0.5% or close to about 1.5% that they went up. And again, starting September is when I really see an increase in these jobs print as more and more people go back up. And unemployment rate, by the way, dipped down to 5.8%, coming in from 6.1%. So we are down. I don't know if that's going to be reflected here on this report, but QQQ is up a little bit over 0.5% here, and SPY is also up over 46 basis points. If you go over to our alternative charts here, so this alternative watch list is mostly about the economy. So this is the savings rate, which you'll notice is actually coming down. That means people are spending more money, right? So historically, we've been at an all-time high. So you'll notice that during the middle of the pandemic, so this is April 2020, we hit an all-time high to as high as 32%. And if I were to bring this back, you'll notice that, since 1960s level, the savings rate in the United States has never gone up this high. This is a result of two things: personal income going up because of the fiscal stimulus, and consumer spending going down. So when you're making more money and you're spending no money, that's why your savings are going up. That's why historically, since 1960s, this has been at the highest level at close to 32%. But this has been coming down. Now we're sitting just under 15%. We're down 46% month over month. When you look at personal income, you'll notice that is also down, right? That is also down a little bit, because it could be a reason why some people may have been making more money from the unemployment benefits as opposed to the actual jobs that they were doing. But personal income is also down, which is very interesting. But it also spiked. This is March 2021, so we saw that spike here. We came back down. Another round of stimulus checks, push higher, came back down, push higher. And this right here is going to be consumer spending. The Fed funds rate, this is going to be the interest rate that we referred to, pretty much sitting at 0.06%, come down substantially. And PCE is going to be personal consumption expenditure. So that's going to be this right here, which is actually up. So, what we're seeing here from trends from the macro level is consumer spending going up, personal income coming down, savings rates coming down, so people are spending money. So we could see, of course, we are seeing inflation also push higher as a result. Yeah, so September schools reopen, and potentially kids will be going back to school, so people will be going back into the labor force. They don't have to stay home. So I think that will also drive the average hourly earnings lower, because think about it, right? If there's more people competing for the same jobs, right now there's such a imbalance between the supply of labor versus the demand for labor, right? The supply for labor is so high, and the demand isn't really there, meaning that not enough people are actually looking for jobs. Even though there are openings, we still have people that are unemployed. So employers are doing everything to basically raise the wages to bring and attract more talent, right? So once there's more competition, the demand basically comes in, then they can get the same amount of labor for lower prices because there's more people fighting for jobs. So Sadan, when is Jay Powell speaking? He is speaking. He started speaking at 7 a.m. Eastern. This was more so about the climate change issues and the central banks and what they're doing. I did listen on it. Didn't really see any material impact on the monetary policy just yet. So I'll keep you guys updated. And we did have a live stream going for that earlier, but there's not enough information, so we switched over to jobs report right now, which seemed to be a lot more important. But yeah, we are up over 0.5% right now, and the SPY is also up over 43 basis points. The VIX is also coming down. So let's take a look at some stocks here. So UPST for Nigel. So, all right, Upstart Holdings, definitely pushing higher. Strong day yesterday. We have been on an uptrend here, making higher highs and higher lows pretty strongly. Let's just listen on this very quickly, and then we'll kind of switch back to this technical analysis.
Well, it's sort of a good news, bad news situation, and the bad news is mostly in the fact that the numbers don't meet expectations, but they are improving. They do show the economy and the labor market are healing. 559,000 jobs were restored in May. I'm calling it that instead of new jobs, that compared to a revised 278 in April, and we saw 27,000 jobs added to April and March payrolls. The unemployment rate, though, drops to 5.8%, a 0.3 decline. Average hourly earnings up by 2% on a year-over-year basis. That's a significant change. Hours worked, 34.9 unchanged. And the participation rate, here's a disappointment, slumps a little bit, falls off a tick, 61.6 from 61.7. All right, what does that mean for the Fed? I'm anticipating your question here, Taylor. They're looking at alternative indicators, and let's look at some of those right now. The employment to population ratio is something they're keeping an eye on. This includes people who are not in the labor force but would like a job and could work. That did tick up 58% from 57.9. The U6 unemployment rate, the broader one that includes discouraged workers, falls to 10.2%. And then they want to get jobs for minorities and women. Black unemployment falls significantly to 9.1%. Hispanic unemployment falls significantly to 7.3%. But those were in the 5s and 3s when we went into the pandemic, so still a long way to go. Women's participation rate does tick up, 56.2. There were some concerns that maybe women had dropped out of the labor force because kids were not back in school. More kids are in school, so a few more women coming back to work. And then let's take a look at the major categories. Manufacturing added 23,000 jobs, and I thought we might have a drop here, but instead we get 24,800 in motor vehicles. They had closed a lot of production lines because of the shortage of chips, but we didn't see the impact this month. Construction, though, 20,000 jobs lost. What happened there? That's one that people are really going to scratch their heads at, given all the need for construction workers building new houses. Services jobs, 489,000, and of course, within that, leisure and hospitality, 292,000 as restaurant workers come back to work, Taylor.
Mike, you anticipate my question on the Fed, so I make one up on the fly and give you another question about the wage growth that we see. Remind us again how you get 0.5% month over month increase despite coming back into labor force, the big services sectors you described?
Well, it's going to be interesting to try to parse through that and figure it out. You should get a composition effect that has a downward bias to it, because more people are coming back in the service side, particularly leisure and hospitality, which is the lowest paid group, and construction workers are the highest paid group, and they fall off. So it does suggest that maybe employers are offering more money. Now, this is wages and hourly earnings. Whether it includes the signing bonuses people are putting out there or not, we don't know. It may be also that people coming off the unemployment lines and unemployment insurance to pay are adding back in because they were not part of the calculation before. But it is an interesting development given the composition of jobs this month.
Mike McKee, thank you as always for that instant reaction. Let's do more market instant reaction with our own Bloomberg's Abigail Doolittle. Abigail.
Taylor, stocks really like.
All right, so yeah, I mean the biggest miss there was like the construction workers down about 20,000, but the Fed's main focus has always been full employment, right? Full employment doesn't necessarily mean the unemployment number coming down to like less than 3%, 4% from pre-pandemic levels, but they're looking at Hispanic workers, Black workers, women's participation, discouraged workers, and what those specific numbers look like. That way they get full participation and full employment, so to speak, for a lot of the labor market. Because two big things that Fed focuses on in part of what is price stability, which is tied with inflation and their monetary policy of interest rates. And the second thing is the labor market, right? The employment numbers that they focus on. So, and they do that by a lot of different ways of, of course, money supply and controlling growth of the economy. By that way, if people have liquidity, if people have cheap borrowing costs like businesses do, they can invest back into the business. They're growing at a faster pace, and there's a need for hiring more workers. And this is the opposite of quantitative tightening, where they actually freeze up liquidity, they raise rates. That way, companies can borrow money that slows growth, and that will lead to more and more job losses. All right, so let's take a look at some of the comments here. And Upstart, strong uptrend here. So this is the uptrending line. It's almost testing some type of resistance here at close to 170. But the one thing that I like about this chart is that we are forming some type of a higher low. So if you do come back down to retest these higher lows, eventually we can see a more aggressive breakout of the upside if the volume follows through with it. Right now we are still, the volume has been picking up, trading above the average volume. So that's the white line you guys see at the bottom. It's been trending higher. It's been pushing up. That means the volume has been moving higher. So if you do get a retest, down to this higher low, then eventually a breakout to the upside, I will keep a close eye at this resistance at close to 166, exactly almost where we are trading at this resistance for a potential breakout, back test, and then move higher to the upside as well. So it's potentially going to look, can't find my arrow. So if you do see any type of a pullback here, wait for it to break out, back test this resistance as support, and then move to the upside even further. All right, so let's take a look at some other stocks here. So NEO, we are up over 1%, trading just over $41. Let's take a look at Qualcomm, up over 0.5%. We're still kind of validating these support, but we are getting rejected by those moving averages right now, trading at 132.50. So we'll keep this intact as a support just yet because we're trading almost exactly at that level. And let's see if we can get that follow through breakout over those moving averages. What's up? What's up? Tesla Q2 2020 comps are around 80K deliveries. The 2021 numbers will slow, show 200 plus growth. Yeah, I mean, if you're gonna look at comparable analysis, they're really good, right? For Tesla, it's still somewhat double-digit, triple-digit growth year over year for production and for delivery numbers because they're expanding capacity like crazy, building gigafactories around the world. So, long-term thesis remains unchanged for Tesla, unless it actually starts materially affecting the business, right? The core revenues, the vehicle production deliveries, that's when it gets a little bit concerning. But right now it stays unchanged as to what we're looking at in terms of production and deliveries. All right, what do you guys think about the day today? Green or red here? We are pushing higher for the QQQ. So quick review on KLIC. All right, let's take a look at this stock here. So strong uptrend, like the trajectory here that it's been moving up, coming in from lows of $17 before the pandemic to highs of $60, up 247%. Strong triple bottom support here at close to, I want to say, $43. And right now it looks like we are testing some type of resistance here at close to 52.30. Again, previous resistance, back tested support when we broke out, and right now we are testing that resistance once again. It does seem like there is some head and shoulders pattern forming potentially, only because this could be some type of a left shoulder here. This could be a head, and we could be forming some type of a shoulder here. So be mindful of that too, because if we do see any type of a breakdown down to support of $43, we could see a breakdown below the neckline as well. So that would be the level to watch as a resistance at close to 52.30. And right now we're just going sideways, right? Earlier it was a clear trend upwards. We were pushing higher, validating those support levels, and now we're just trading sideways. BlackBerry's jumping like crazy pre-market. 3%. That's incredible. Yeah, I think it went higher, right? I think BlackBerry and GME both went higher. There we go. So guys, I think great. All right, I might have to cut the live stream here because the power just went out. So if you guys are still there, I might have to end the live stream. I do apologize because the power just went out here.